The S&P 500 is coiling and has been basically since the beginning of December, and we're coiling right into the point of the FOMC and VIX expiration on Wednesday. Sean's going to talk a little bit more about that here in a minute. You can see the largest gamma exposure concentrations are at 60.75, which is right where we closed today. Most of that is 0 DTE that's going to be rolling off after today's expiration. Then we've got the 6100 strike. This has been a major point. We've tagged it or nearly tagged it a couple of times in the past couple of weeks. We also have the 6150 strike. And if we zoom up here a little bit further onto the chart, way up here in nosebleed territory, we've still got a pretty decent GEX at the 6200 strike as well. Another thing I noticed today is all the volume coming in at the 6150 strike. That's over 200,000 contracts on the S&P 500 just today at this 6150 strike, and that is way higher than we were trading today. The last several times that I've seen this amount of volume trading in the options market, that much higher, it did serve as an eventual target that was tagged within a couple of weeks. I don't know if that's going to happen again, but I do think that's interesting as we're forming this consolidation coiling pattern as prices continuing to compress right into this zone. So it's going to be a very interesting week. There's a lot of data coming in here, and so it's going to be very important to monitor the GEX data and the volume data in the options market in real time.
Thanks, Anthony. I'm going to point out a couple of very quick points on the S&P and the Nasdaq. You can see the Nasdaq is way over the indicators that I like to use on my chart, the whole moving average and the Keltner channels. And what's interesting about this, even though this is not a condition that typically lasts, we typically see consolidation or even a pullback after getting that far above the upper Keltner channel. But SPX is notably less bullish. It's stuck here below the whole moving average, this pink line here. It's either an opportunity or this is kind of signaling that maybe something's wrong. I'm not sure, but I'm going to continue watching that. So moving over to the VIX, we'll start with the gamma picture. Very negative gamma. This is not unusual for the VIX, especially coming into a day like Wednesday morning, which is the monthly VIX option expiration. Very low GEX weighted volatility gauge, a lot of negative GEX on the VIX. On the 3D chart, you can see where it's concentrated, and it's basically at 13, at 14. So this is negative gamma. If you go up here, there's some that you can find that's at 15, and basically zero gamma is at 16. There's a lot of significant drops that you can look at that occurred not just after OPEX, but after VIX expiration as well. That's the significance of that date to me, is that sometimes you can see the character of the market change after you get through this period of time where all of these incentives to hedge or to collar the market disappear.
Thanks, Sean. Yeah, you were mentioning the Qs and the divergence we've been seeing the last few days between the S&P 500 and the Qs, and I just want to take a look at the GEX data. 540 is the largest gamma exposure concentration. It's also where our upper dealer cluster zone begins. Obviously, you can see the move over the last couple of weeks has been fast and furious. This could be an area where we see a pause or a slight reversal between the 530 and 540 zone as we are approaching this dealer cluster level. Interestingly, the 550 strike is seeing gamma exposure growing. And so it's not enough, I think, to overtake what we're seeing between 535 and 540. However, it is something to watch. We could see an opportunity on any consolidation or pullback back down perhaps into the 530 level or 535 level as an interesting long opportunity for further upside. And this is basically assuming that a year-end blow-off top rally does come to fruition. So that's something to really keep our eye on over the next coming days.
Anthony, I wanted to look at a little bit different type of situation than what we typically cover. I've got Ford pulled up. F is the ticker. I just wanted to point out a few things about the chart. You can see we've been in a downtrend basically since December started, but if you zoom out a little bit, we're really not in a downtrend. We kind of have this more of a consolidation pattern since August, sideways in a choppy fashion. So, price up and down and basically to the side though the whole time. After that sharp drop that occurred in July, we basically been moving sideways, and actually you could draw a trend line that's slightly upward as long as this price holds here. But we are below the lower Keltner channel, and this consolidation pattern may represent an opportunity for Ford to see some sort of rebound to either this middle Keltner at 1084 or even the top of the channel would be just under 12 at 1157. But let's take a look at the gamma picture, see what that looks like. So here's the extreme negative gamma. And you can see we just have these two large negative gamma clusters at 10 and at 982. So this is basically showing that there's not a lot of negative gamma below the 10 area. And so this may be a spot where the decline stops, at least for the time being. And it does represent a dealer cluster zone as well at this 982 area. So Ford may be a rebound possibility here to get back to that 11 or even close to 12 mark.
Thanks, Sean. Next, I want to take a look at Tesla. Tesla trading at nearly 475, a little lower here in after hours, up just under 8%. We're looking here at our GEX levels chart, and this is showing the three largest positive GEX levels and the three largest negative GEX levels. Basically, this helps when we see huge moves like we've seen in Tesla. You can really get a feel for where the major levels are. Obviously, on the downside, it's right concentrated around the 350 strike. We were in this zone for several weeks in November until we finally broke out to the upside, and we barely had any pullbacks for investors to even get in. If we switch over to our GEX clusters, we can actually see this is the largest gamma exposure concentration by far, as I mentioned, in over 200,000 contracts traded at this 500 strike. So clearly, market participants are speculative at the 500 strike. They want the 500 strike. I don't know if it's going to make it there or not. I mean, we're almost in a complete parabolic move higher. And so it's like the Wild West up here. So we'll see. This is only basically for the gamblers and extreme speculators. So tread with caution. But I did want to highlight that this is what the GEX data shows us, the volume data shows us. It basically shows us where the market is concentrated. And so the market's concentrated at the 500 strike. And so far, the trek has been right towards that level. So definitely something to watch.
Thanks, Anthony. Let's take a look at Goldman Sachs. The financials have been doing pretty well lately, but consolidating since November started after that large move up for Goldman, at least. And you can see we are below the whole moving average, but we're fairly close to the lower Keltner channel, and the Keltners are basically moving sideways. So it looks to me like this might be preparing for another move higher. Let's just take a quick look at the gamma picture and see if that agrees. We were in negative gamma territory, but we've swung back to positive gamma as of today. And you can see we have a pretty large gamma cluster at 600 for Goldman. Our 3D chart shows that a lot of that is at December 20. We're kind of close to the zero gamma line right now, and we did have a lot of volume at 600 today too. So looking at the chart and then looking back at the gamma picture, I think Goldman at 600 has a pretty good shot by this Friday. And at current price, 587. So that's not too bad of a move if that does happen.
All right, guys, we're going to be continuing the conversation in our community Discord. You definitely want to check that out. When you get a chance, I'll put a link in the description below. We've got a ton of great traders in there sharing their own experience, their own trade ideas. So that's definitely something you want to check out. Also, you can head over to geeksoffinance.com if you want to get access to our gamma exposure dashboard and our option flow analytics tools. I'll put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.